You know you need to review your trades correctly to reach your trading goals. And reaching your trading goals are extremely important to you, but you're not sure how to do so or what that would look like. Well, in this video, we show you exactly that. Hi, I'm Mike Bellafiore, co-founder of SME Capital, a proprietary trading firm located in New York City, and the author of the trading classic One Good Trade and the Playbook. Founded in 2005, SME Capital trades stocks, options, futures, and crypto, both as discretionary and automated traders. In this video, a promising developing trader at the firm shares in step-by-step detail a textbook example of an outstanding trade review.
All right, so this was a low-flowed intraday trend break fade on AGRI. This was earlier in the month in 3/10/2022. All right, so for an overall bigger picture of what the overall market was doing, SPY and IWM have retraced from their highs given the Russian and Ukrainian war. The war has caused a massive spike in commodity prices along with the agricultural stocks. So fertilizer production, given the war, has curtailed by natural gas prices and coal prices being higher, and this has caused the fertilizer prices in turn to be either slowed in production and or pushing the food and crop industry prices higher. The soaring values of these prices were supported by the concerns of the global export distributions from the Black Sea region due to the Russian attacks and the Ukrainian war. Many ships have not been able to cross the Black Sea, and this has caused the prices of these commodities to increase. And on the right here, I just have some overall themes, given the green are the bulls and the red is bear. So just a couple of overall themes there besides the agricultural prices. So just for a overall bigger picture of what the SPY is doing on the daily, trace back from that 479 high, and kind of just in this more or less wedge kind of here from February to March. And then here's a big picture for the daily on IWM. So we had broken out of that multi-week range on IWM in November, but did not have any follow through and kind of retraced off that 244 high. And now we're kind of consolidating in a 21-point range under the previous multi-week range. So here's more of an over less bigger picture for AGRI. The stock surged 325% from the previous day close on March 10th. From $1.50 to over $5.14 as a result of a binding letter of intent to buy tissue culture propagation business, Deruve Plants. This was for about $69 million. So this deal was expected to provide a leading position on tissue culture propagation as the plant cultivation, including the robust IP portfolio, aimed to deliver increased crop yields with the reduction of the environmental footprint.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So here's just a daily chart for AGRI. As you can see here, we've spiked massively from that $2, 173 kind of range up to $5.14 on the day of the trade. And overall, we've been just kind of in this consolidation / range to the downside ever since.
For the big picture, are there specific levels on SPY that are particularly important? Where are we in relation to how close we are to any of those levels? SPY or Qs?
I wouldn't say the SPY would be totally important in a trade like this.
I totally agree, but I want to get to that second. The first thought is, where are the important levels for SPY, and where are we in relation to that?
Well, I do see, at least on the daily chart, that 458 was that double top from back in February. But overall than that, I would just consider the 420 from the beginning of the year, and then the 410 from earlier in March as a significant level. But overall than that, we'd be kind of just range bound between around 420 and 430.
So we're in the middle of the range.
Yeah.
Trending down.
Yep.
Okay. And then I agree with you, which in this trade, that's not going to matter. But I do want you to get in the habit of knowing where those SPY levels are, or Q levels are, or IWM levels are, depending on what you're trading. And then getting to that second step, which is, hey, you know, in this trade, it's really stock dependent, stock dominant. And because of the big breakout, it's not going to be as important. All right, good. And so like we did with some of these other guys, we're going to go through grading system, 1 to 10 for stock selection, big picture, trade strategy, intraday fundamentals, technical analysis, reading the tape, trade management, technology, how you reviewed your work, and then overall diligence.
Sounds good.
But big picture, 10 out of 10.
All right, so this was the trade strategy for me. So for a stock like this, I look for a news catalyst pushing the stock either pre-market or during the day. And it also needs to hit my market views and pass my backtest script that I run. So for this trade, I identified a blow-off top and a stuff candle trapping any longs that bought the high of daybreak. I look to identify levels where buyers start to fade as the stock breaks the intraday trend. I then identify a consolidation period where buyers and sellers have reached stalemate, along with a clear volume shelf using volume profile. And then I will get short, risking high a day and any change in the tape. And I'll utilize the tick chart to identify any changes in momentum and manage my risk. And then once the tape changes and we reclaim the 21 EMA and the 50 SMA, I'll cover my short out.
Good. You want to think about catalyst, setup, and then trade when you're coming up with the trade strategy.
So for some intraday fundamentals here, we had a pretty wide 52-week range, along with increased R-vol. So we had 22 R-vol on the day. And this is something I pointed out, as we'd done 22 times the average volume on the day, given the news, along with being one of the highest traded tickers on the day for its float size. And it also came up on many of my market views, along with a significant R-vol and net change percentage with the backtested statistics that fit my trade criteria. And I'll go over those in like 2 or 3 slides from now. But mainly for me, it was mainly the R-vol and the net percent change that kind of picked this up on my radar. So just a quick 2-minute chart. As you can see, we had a pretty strong bullish trend from around open to 12 o'clock. And then this is something where I really haven't seen and where I really want to learn about is the high of day stuff candle. This is really what I started getting involved. And then we started to pull down to around the $4 level and then put in this range for about 12 o'clock to about 1:30. And then we broke that trend and then trended down to close. And the one thing I do want to point out is that massive volume shelf from the 450 to 460 range. And then the average line for volume declining as the volume fades throughout the day. So just a 5-minute chart. As we break the intraday uptrend and retrace, we fail to reclaim the 473 to 514 level, later not being able to push above, leading to a fade to VWAP and then closing low a day. And we can see here the volume's fading right after that high day stuff candle, blow off top sort of idea. And we have not seen anything push above this volume trend.
And look, when you're doing the technical analysis, and I know you showed the chart prior to that, but I want you thinking systematically and logically through this. For your technical analysis section, just redo a slide on where in the last 5 days of trading, just to sort of and put the levels in there from the last 2 or 3 days that are most significant. So let's take a look at a daily chart. Let's take a look at in this case, 5-day chart. Okay, yeah, and then let's look at an intraday chart, just so that we're thinking through the technical analysis in a systematic way.
So start kind of more zoomed out and just zoom in incrementally.
Yeah.
All right, so this was my technology / market views and scripts that I use for dividing a trade like this. So this market view that I have below here will run every second throughout the trading day, and it'll populate tickers from there, and then I'll run those tickers through a back test to see the probability of what I call the gap fade playbook playing out. And then some of the rules and, well, the code's below here, but I have some rules also that help me identify stuff within the market view So just, if the ticker is traded a higher percentage change of over 100, I'll highlight it green with black text. And so it'll look like black text, but then it'll have a green background. And then if it has a higher R-vol with over 5, I'll have it as yellow. And then if the ticker has high R-vol and the ticker has a percentage change over 100, it'll be a green background with white text. So this basically, in my head, I will have them sort of ranked, given that the rules I've created within the market view. And then to the right here, I have my gap trade script that will help me identify high probability trades that will close below their open, given the back-tested statistics. So some of the back-tested symbol qualifications that I use for this are symbol length of less than 4, so it removes any sort of warrants or long OTC stocks. I mainly want to trade only US equity within these. Then any net percent change over 10, R-vol over 2.5, accumulated volume over a mil, and then the gap percentage from the previous day over 20%, along with its average gap of when it does gap over 20%, of being 20% or equal to 20%. And then some of the output statistics that I will look at to identify a trade like this are the average percent gain from open when it closes above its percent open, the previous gap of the qualification amount of what I put in as 20, and then some numbers where we can close below open, and then the integer and percent change, the average percent change of the open to close below open, the average low from the open when we close below open, and then the previous day gap volume along with any other input volume. And these help me kind of grade myself of if I should press it or if I should ease off or not even take the trade at all. And then to pass the gap fade playbook, I have identified a market view criteria, which is the right. Then it will go over to the gap fade and must have 3 instances of a 20% gap, given that the gap closes below its open. So to kind of visualize something like this, this is what it will look like given the daily chart. So the script will run and help me identify stocks that I've met the criteria in the previous slide, and I'll plot arrows on my chart, so it'll do it automatically. And then in simple terms, the more arrows that are populated on my chart, the more conviction I have statistically that the backtest will close, the stock will close below its open. So as you can see here, we gapped over 20% and ended up closing below its open. Same thing on this. Every arrow, for the most part, will have a red candle. But I also have some other examples here with some other tickers, given ATRL, MULN, and then FUN. Every time we've gapped over 20%, it will kind of tally it up kind of thing. And the more arrows on my chart, the more conviction it gives me to take the trade and or press it if I see something intraday setting up. So it's just another check in my favor. And then you can see here, this red box here will give me the amount of times that it will gap over 20%, yet close below its open. So in this instance, it was 3 times, not counting the day, the day it was traded on. And then it'll divide it by how many times it did do it. So it would be 3 times. So it gives me a 75% chance that the stock will close below its open, given the previous parameters.
Spot on with technology. 10 out of 10 as to how you do a trade review, highlighting technology.
So before I got involved, AGRI had stuffed high a day, and many longs had got trapped. And this was the highest volume bar on the day. And then this is where I started getting involved within the trade. The tape example that I noticed was the second reclaim of the volume shelf also got stuffed, trapping many longs. So I also have a 5,000 share block filter to the right here. As you can see, we stuffed from 472 down to 424 in literally like 7 seconds. And this helped me confirm that my thesis was correct and that the sellers were clearly in control. So this was at 12:30, right before the second stuff candle. So the first stuff candle was here at 5:14, and then I'm about to play the second stuff. So it happens rather quickly, but I have the tick chart on the bottom, and then I have the 1 minute chart on top, and then the tape just right next to the minute chart. So I can go back and do it again because it was kind of fast. I'll just go a little slower with it. But you can see we flashed. I'll go back again, hold on. Oh, it's a little fast. So we flashed 474, 475, some offers here at 475. They highlighted black because they're over 5,000 shares. So it highlights black on my montage, just have a filter set up. But We flashed that, and then we immediately flushed down, breaking under 445,
Yeah.
and then breaking
Yeah, I see that. Yeah.
really fast. So that was just really quick, but let me go back to the deck. So this is right here. This is what I just showed. It just flashed again, that 475, 474 with some offers there, and then just immediately stuffed it. And this is something where I confirming my thesis.
You want to talk to Ryan Hassan about this stuff trade in general? Do you know Ryan Hassan?
He's a senior trader, right? Is he?
I'll connect you guys.
Okay, cool.
So he's pretty
That'd
good
be awesome.
with the stuff trade. The thing about that is a stuff trade tends to actually trade a little bit more above resistance in this case. It trades above resistance, and there's actually even a bunch of volume, but then that candle closes below the resistance area. So it spends time above, and you're like, oh, it's breaking out to the upside, and momentum longs jump in and get a big position, and then it just closes below that breakout area, that resistance area. So all of the momentum longs are like, oh no, and we're wrong. So that's and then it trades lower considerably. So that's what a stuffed trade looks like. Does that make sense?
Mm-hmm.
So I'll connect you guys.
That'd be awesome.
But that
Thank
was
you.
excellent job of incorporating reading the tape into your trade review. Yeah, so we're gonna go 10 out of 10 on reading the tape into the trade review.
Yeah, so this was the trade view chart that I pulled. I upload all my trades to TradeView to help me track my statistics and my P&L, along with some other market criterias. But as you can see, we stuffed high day here. So we broke that high day at I think it was at or just around $5, $4.99, $5, and we went up to $4.14, but immediately stuffed it. So I got short as soon as we stuffed it, and then added as we were kind of pulling down from it. So I got short risking high day right after the first stuff candle, and added size as we retraced and started to break down. And then this is where I could have added more on any retracements, but I didn't have any more locates. So I was kind of stuck with the amount of shares that I started the position with. But from there, I covered most of my short at VWAP, and then covered the rest of my runners when the 21 EMA and the 50 SMA crossed, and this was going right into close anyways. Other than that, for more of a trade review, I could have added way more size here, but I'll go over that in the next slide.
How do you feel about your covers?
From more my process-wise, this VWAP cover was unnecessary. I literally only took this off literally because I was like, oh, it's at VWAP, maybe it'll bounce. Like, that cover should have not happened at all. So this is something I'm definitely working on, is sticking to my process and sticking to my playbook. Most of the covers I should have held until close, because there was no real momentum change or no real tape change. This trade could even be set up for a day 2 swing. So what I learned from this trade is how price action and tape can show me who's offsides within a trade. And utilizing my tape reading skills in the tick chart, I clearly identified where the stuff candle occurred, and this can help me confirm my trade thesis. So how could I have taken this trade better? I could have gotten way bigger as we broke the wedge pattern to the downside. And I ran out of locates within the short, so I managed my short from high day, but I didn't have any more locates. So that definitely could have been a way to improve, would just be locate more shares prior to the day. But I also did not need to take off any size of VWAP, as there was no change in tape along with no cross of the SMA or EMA. So literally no reason to take it off, because no change in tape, and it did not match my process. So this was an error within the trade. And then if I was going to take this again, I would have looked to not take off any size of VWAP, and then set the trade up for a swing, because I was so deep in the money from high day. And there was, or just overall, but I didn't have any overnight trading ability yet. Just for future reference, I just like to build this out within my head. I've actually been working on a day 2 short setup with Brandon. We've been backtesting a lot of the similar tickers, and we're kind of building a business off of that to set up stuff for swings. But overall, I would look to set this trade up as a swing. for a short, but I'm not there yet in my trading career. So yeah, that's the trade.
All right, good. Yeah, I thought stock selection was solid. 10 out of 10. You chose the right stock to trade. Big picture, 10 out of 10. Trade strategy, 9 out of 10. I think you could do a little bit more on where you'd be wrong and how you're actually going to exit your position. I think you need a little bit more detail there. Intraday fundamentals, I'd love for you to add VIX overall just to get into the habit of it. I know that it wasn't particularly important for this trade, but I do think that's a good best practice to add into there. 9 out of 10 on intraday fundamentals. Technical analysis, 10 out of 10. Did a good job setting that up. Reading the tape, good job, 10 out of 10. Trade management, 10 out of 10. Technology, very strong. I might even give you 11 out of 10, but we're just going to give you 10 out of 10. Review, solid, 10 out of 10. Diligence, presentation, very, very strong, 10 out of 10. So you are the first person, Dan, to more than be tracking based on where you're at in your career with a playbook trade. So this is the third one we've done. I think that's right, Kurt. This is the third one we've done, and you were the first one under our new system to achieve success in showing us a playbook trade that was done in a way that's going to help you to achieve your goals. And for those who haven't actually seen these before, for somebody like Dan who's a senior trader, we want him to be getting 85 out of 100 of these 10 variables. So we've got stock selection, big picture, trade strategy, intraday fundamentals, technical analysis, reading the tape, trade management, technology, review of trade, and diligence. And so we want to see him, when we add up all the scores, get 85 or better since he's a senior intern. And we say, if you're doing that, then this is an example of you doing this practice that's going to lead to you achieving your goals. You want to do well at everything you do at the firm. Playbook trades, playbook reviews are important to you reaching your goals as a trader, but you gotta be able to clear the scores that we expect. So this is better than we expect. This is you trending towards where you want to be as a trader. Good work. First one to clear the hurdle. Expect more guys. We're a little bit unfair to the guys who went before us in that they were the guinea pigs. But yeah, first one where this is the type of work we expect.
Awesome. Thank you, Mike. I appreciate it.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.